Welcome to the Techno Fundamental Report for August 21st. We're of the opinion that we may see a real improvement in the IPO market, the initial public offering market. However, I think it's important to understand kind of how this works. In order to get in on an IPO, I mean the good ones, the ones that are going to be a good deal, you have to do them all, the good ones and the bad ones. It's a strategy in itself, and I choose not to do that. So instead, I'll notice a IPO that comes out, and I have to say that the lockup period is very important because basically you've got a group of insiders who started the company or employees of the company, and they would like to cash out some of their shares. So it's traditionally about 180 days after the IPO that the lockup period expires. So what I have found in my experience is, like, let's take Amazon here for a minute. You know, Amazon went public back in here, which was May of 97, at a price, pretty low, and we waited 6 months, 180 days. Before we bought it. And we really didn't run into any kind of lockup selling that caused a problem. So basically what I'm saying is that if you're going to invest in initial public offerings, I would wait that 180 days and see how the stock reacts to potential insider selling. Now, the ISM Purchasing Managers Index is starting to show some improvement here. It says some manufacturers say the lower ISM reading is due to customers holding off or cutting back on buying, likely because of uncertainty around tariffs. But now that the tariffs have been sorted out, it could help pick business back up again. This is bullish for the ISM, along with rates and the dollar, both which should ease into the rest of the year. So this is a positive reading here. You can see what happens in bear markets. Your ISM readings really plummet. And then you get the bull markets and things are good. It's just another way to look at what's going on within the economy. Now, one thing I wanted to mention is I have never seen in my career a bear market start when everybody's pessimistic. It's usually when everyone is super optimistic and are actually experiencing euphoria. Think of the dot-coms, think of that period, how just, people were day trading, things were crazy, so forth. So what I'm telling you right now is, and this is a quote here that kind of talks about this, is just as outright euphoria is often a sign of a market top, fear is for sure a sign of a market bottom. Time and time again, in every market cycle I have witnessed, the extremes of emotion always appear, even among experienced investors. In fact, we call it we're getting giddy. When the world wants to buy only treasury bills, you can almost close your eyes and get long stocks. So if you look at the bull-bear ratio, you can see here that we've got pretty much extreme pessimism. So I'm simply saying we're not in a euphoria situation here. We're more into somewhat of despondency, depression, hope type area of this graph. So just be aware of the fact that, bull markets start when everybody is super pessimistic. So this is how we are today, just to kind of show you the graph in a little bit more detail. You can see here that the bears in the survey are far outnumbering the bulls. So there's a lot of pessimism here. Another thing I wanted to discuss was the concept of fraud. There's a lot of fraud out there, and there's a lot of gimmicks. And I've been hearing a lot of stories about people like losing all of their savings due to this kind of stuff. So the first thing I would say to you is that when you go to a broker or a registered investment advisor, be very aware of who the custodian is. We use Charles Schwab, and they're, regulated, very credible, and that would be the first thing that I would want to know about is who is going to be holding my money or holding my portfolio. Like here's an example: woman out 200,000 fraud investigation lost against financial advisor. Former financial advisor sentenced to 12 years in federal prison for multi-million-dollar fraud scheme. There's a lot of Ponzi schemes. There's a lot of fraud schemes. Be careful about where your money is being held, i.e. the custodian. I wanted to kind of point out a couple of things here. When things get frothy and you get into a bad investment, you've got to either use a stop loss or a trailing stop loss. Now, the purpose of a trailing stop loss is to maintain your profit. So here's Walgreens. I hear they are on the verge of bankruptcy. I mean, look at this. This stock was up around 66 and has dropped all the way down. Well, it actually got under $10 a share. So Walgreens don't look very good. But here's another hyped story. Do y'all remember GoPro, which was the cameras that you wear on your head? That stock actually hit 100, and right now it's at $1.26. So you've got to protect your portfolio using a stop loss or a trailing stop loss. Now I want to take a minute and talk a little bit about what's going on with artificial intelligence. Is it a bubble? Is it too hyped? I don't know. We're starting to see some cracks in the armor. And the reason is MIT just came out with a report yesterday, and I just got the report today. So I'm going to say I really don't understand what they're talking about, and I'm going to read it tonight. But all the report is basically saying is that 95% of generative AI pilots at companies are failing. So in other words, the applications of the technology aren't profitable. So what's also interesting here, and this kind of looks like a bubble a little bit, if you take the Mag 7, which is 7 stocks out of the 500 stocks on the S&P 500, so 7 stocks is approximately 1% of the total pie. The market cap for the Mag 7 is $18.8 trillion. Then if you take the other 433 stocks, it's $18.8 trillion. So 1% of the stocks in the S&P 500 are driving half the market. So it's just something to be aware of. It could be the formation of a bubble. I'm not saying that. I'm just simply saying be aware of the fact that this market has gotten very concentrated in 1% of the market. So let's take a look at that 1%. All right, here's Apple. You can kind of see here what's going on here, a little bit of a rollover. Doesn't look terrible, but it hadn't been going anywhere, and it's down about 17% for the year. Here you have Amazon, again, we're just kind of moving sideways, somewhat breaking down. Here's Broadcom, which is actually rolled over and broken through some key moving averages. Here is Constellation Energy. This is one of the companies that would provide electricity to these data centers. You can see here breaking a key moving average. I'm just trying to say I would be very cautious right now with this group. Here's GE Vernova, same thing with the energy thing, breaking below some key moving averages. Not saying that this is going to be, plummeting. I'm just giving you my opinion right now. It's just that I would be a little cautious right now when it comes to the AI trade. Here's Google. It looks pretty much the best of the group, and it's holding quite well, but it did break below the 10-day moving average. Here is Meta, again, breaking down below some key moving averages. Now, these things can turn around and go right back up again, but I am saying I would kind of hold off. I would hold off right now. I would hunker down. Microsoft, look at this one. Microsoft has really been, kind of rolling down, holding that 50-day moving average, But the momentum is definitely, it's not improving, put it that way. Here's NVIDIA. This is the big daddy. We broke below the 10-day, made a low, and then we came down and made a further low below the 21-day, but it's holding above the 50-day. Not saying that NVIDIA is in trouble or anything. I just think that this has gotten a little frothy. Here's Oracle, kind of a big break here. It came down, broke below these key moving averages, is holding the 50-day. Again, just be cautious. Palantir, very disappointing. They came out with real good earnings and so forth, but it is basically rolled over and is breaking down on very heavy volume. So just be aware. Here is Snowflake, which is a software company dealing in storage. It was moving sideways, breaking down, breaking down. Again, just be aware of this. I'm just showing you the AI stocks. Here's Tesla. Tesla's just basically moving sideways. Here is Vistra Energy, again, rolling over, breaking through key moving averages. So it's not the end of the world, but I am saying this is a time probably to kind of slow down a little bit. If you got some losses, maybe kind of trim your portfolio a little bit. I would avoid aggressive buying right now. However, the overall indexes in the market look pretty good, and we'll talk about that next week. So if you have any questions, please let me know.